Welcome back. Welcome back. You're listening to Whissel Wednesdays.
Always moving me, Brian. Sorry,
AM
Kyle.
1170, The Answer. My name is Kyle Whissel, your host with Whissel Realty. Joined as always by Mr. Jason Hall with Team Home Loans and our special guest today, Miss Cyndy Higgerson, also with the Whissel Realty team.
Thank you, Kyle.
Are you scared?
No.
You look scared.
No, I'm not scared at all.
You got this?
I got this.
All right.
I'm
I
gonna
love
crush
it. I love it. So, Jason, before the break, we had Dave Reyes, Financial Architecture. Amazing guy, just sharing, his take on the market, the effects of Trump, all of that. I know that we talk a lot about mortgage rates, and for the last 3 or 4 years, it's kind of been boring. There hasn't been a whole lot happening when it comes to mortgage rates, but these last few weeks or months have been kind of crazy, kind of volatile. And rates have been going up and up and up and up. Is that still the case, or are we starting to see a little bit of a change?
Yeah, so we're starting to see rates slide back down. They're not mid threes, but they're now, low fours, high threes, depending on what you're looking at, your credit score, your down payment, your situation on there. But one thing that the experts have been talking about for 6 years in a row, rates are going up. Rates are going up. And they've been wrong 6 years in a row. Well, this year, they said, well, heck, if Trump gets elected, rates are going to have to drop and the market's going to crash, just like Dave was talking about earlier. And, of course, they've been wrong again so far on that. But as I told your staff yesterday, I really believe we're going to see rates remain in this 3.5 to, at the high, probably 5% range, because Dave Reyes and I were talking about the market just won't allow those high rates, right? If you had to tell your clients, Cyndy and Kyle, that it's a 6% rate and your payment that was $1,800 is now $2,200, they're probably not going to buy the house. Well, if nobody buys houses, guess what? The market and the economy is not going to continue to move. So that's the last thing I think we're going to see in the market, especially with a real estate tycoon leading, our country. So I really believe we're going to see rates remain relatively low, but they have dipped back down. So that's a nice thing. After a huge run up for 5 or 6 weeks, we're starting to see cooler, calmer heads. Even with the stock market near all-time highs, we're still seeing rates come down. So that's good news for all of us.
I love it. And so there's also been good news. So we actually got good news twice in the last week. One, rates have started to come back down a little bit, closer to reality. Two, the mortgage insurance premiums on FHA loans have changed.
Yeah.
So first, let's talk about what is mortgage insurance.
So mortgage insurance historically has been when you put less than 20% down, the mortgage company wants you to have a mortgage insurance on that program. And so that's been out for years. And about 10, 15 years ago, a program came out where they called it lender-paid mortgage insurance. So there's probably people listening right now that said, oh, I put less than 20% and I don't have mortgage insurance. Well, you don't have the regular monthly mortgage insurance, but you took a higher rate and you paid a lender-paid mortgage insurance, so it would be tax deductible, and there's some benefits to that. And so for each client, it's unique, whether they should have mortgage insurance, whether they should do lender-paid, whether they should put 3% down, whether they should put 20, 25% down. But the nice thing is conventional mortgage insurance the last year and a half has really come down quite a bit because it's been a safer investment. And the mortgage insurance companies are like future traders. They're like, am I worried about real estate? Do we think there's another bubble? If so, they're going to raise premiums. If not, they're going to lower. So conventional has been lowering and lowering. Well, finally, FHA, as these guys are getting ready to get ousted at the Obama administration, they just announced on Monday that they're lowering 0.25% effective the 27th of this month. So that means a lot of clients are going to save $100 to $300 depending on their loan amount size, but that's 0.25% rate reduction on an annual basis for your mortgage insurance if you're going to FHA. Again, FHA is the Federal Housing Administration loan. It's been a loan that's been around since the Great Depression. It's a great loan for those that have any credit challenges. If you've had a bankruptcy, if you've had a foreclosure, if you've had a short sale, FHA is more lenient than any other loan program besides the VA. Now, the VA I still believe is the best program out there. Cyndy and I will talk about that here in a moment. But that's the neat stuff going on. And like you said, some of the great news. Rates are down and FHA is lowering that 0.25%. But it's funny how politicians want to get in their last stuff before they leave office because they don't want the next guy to take credit for it, right? And I'm sure, as a lot of my liberal friends like Travis in our office, he's already like, well, the reason the stock market's up, it's because Obama. Everybody's excited about Obama. It's so funny. So funny how the left think.
I love it. So Cyndy, for example, works up in Oceanside. A lot of homes. Cyndy, average price up there is
$480.
$480. Let's just call it $500 to make it round.
Okay.
What's somebody going to save on an FHA loan because of this reduction in mortgage insurance on a monthly basis?
Yeah, so on a monthly basis. So let me just kind of talk this out so people understand. So, 1% of $500,000 would be $5,000. So a 0.25% of that would be $1,250. Divide that by 12. That's a little over $100 a month that you're going to save if you close on the 27th versus closing on the 26th. So if you're in process right now with an FHA loan with any bank anywhere, and a lot of banks you don't realize are even doing business outside of America, let alone outside, the United States, or outside of California and San Diego. I like to do my business right here. But make sure you don't close that FHA loan before the 27th. Make them wait. Make them wait. Make them pay for a lock extension. They should be willing to do that if you're a good client. That's something we do at Team Home Loans.
So if you're listening to the show right now, you're in escrow on a property, you're doing an FHA loan. If you're scheduled to close before the 27th, you should start asking for an extension today.
Right now.
Ask for it now. Don't wait until the
on
last
average,
minute.
$100 a month you're going to save for the life of that loan.
$100 a month. You're talking $1,200 a year. I mean, that's a lot of Starbucks you could buy with that $1,200
That's a lot of Starbucks.
That's a lot. So again, take that. That's what we want to do, to our listeners of the show, is give you some advice that you're not getting out there from the mainstream media. We want to give you some insider information. Save yourself some money. Ask for an extension of your closing right now. Set that thing up to close at the very end of this month, or even roll it into February. Then also look at your rate right now. If you haven't locked your rate already, rates are down significantly. Who knows if they're going to go up or down in the future, but the rates are much better now. And as the saying goes, if you like it, lock it.
Right.
So you got a much more attractive rate today than you had 2 weeks ago.
And some lenders will renegotiate the rate. If you locked it 20 days ago because you thought the rates were the low then and they've gone down like they have, many really good reputable lenders will renegotiate your rate, give you the lower rate. So ask them. If you don't ask, they're never going to offer you, right? You got to ask for that.
I love it. And if you want to get connected with Jason, give us a call, shoot us a text, 619-663-SELL, 619-663-7355. Jason, what other tips do you have in 2017? I mean, where do you see things going with the mortgage industry? Any other big changes? I know there's been a lot recently. Any big changes you see in store? Or do you think we're going to kind of level out from this point forward?
As far as the rates go, here's something I would advise, right? As a Christian conservative, I'm excited to see that Trump's in office. There were some other candidates that I was thinking about having versus Trump, but he is the guy that won he won the presidential, right? So he not only won the conservative side, but he also won the presidential race, and that's what we're excited about as conservatives. And I like that he's trying to bring businesses back to the United States. As somebody that's been in the mortgage profession for 25 plus years, as you know, Kyle and Cyndy, and I preach that I'm local right here in San Diego. My company, my underwriters, my funders, my doc drawers, my processors, our whole entire team is right here in San Diego. Our office is 2 minutes from the stadium. Our corporate office is like 30 seconds from the stadium. We like that. Many mortgage companies, people don't realize, Bank of America, we've talked about in this past, their mortgage operations is in India. Okay. Quicken, really well-known company, no longer owned by Quicken. Quicken only owned Quicken for 18 months. They sold it back to the gentleman who owns the Cleveland Cavaliers. So if you do a loan there, you're helping a guy buy NBA franchises. Now, he's moved his entire team to Detroit because in Detroit, Michigan, they paid him to come there and bring business because they had no business because people were buying their cars other places, and then they all lost their jobs. So be careful where you spend your money. If you spend your money online with companies that are not in your particular area, whether it's out of your county, out of your state, out of your country, your job's going to be in jeopardy because you may end up like Detroit. And that's something I tell people, be very careful who you do business with.
I love it. That's good stuff, Jason. The other thing that used to be around, and I've heard rumors of this being back, but is the stated income loan, is it back at this point?
Well, there's different things out there. So here's what we know. We know that the government currently has outlawed a stated income loan for primary residence. You cannot do a stated income from primary. You have to show some form of fashion of how you derive their income. It's required right now. Now, that might change under a Trump administration. So what a lot of lenders are doing is they'll do a bank statement. Let me look at your bank statements. It's not a true stated income loan because they're looking at deposits, verifying like a 12, 24, 48-month average to determine your income. The government requires to determine income. However, on investment property, the rules are not the same. You can do a stated income under investment because you're not living in that property. The government figures that if you're an investor, hey, you're an investor. You're not living there. You're a sharper person than the average person. You've bought investment property, so we're not going to try to hold your hand. But we want to be careful. This is what the government over the last 8 years have done. We want to make sure the people who live in there are not being taken advantage of by the big banks, by the traders out there. And so there's no stated income for those, but there's bank statements, and other alternative. But again, we have to make certain we can document your income. If not, the bank will own your loan and you can walk away and not take any jeopardy even on your credit if it's determined that the bank did something illegal based on the current government guidelines.
I love it. If you want to get connected, Jason Hall, Team Home Loan, 619-663-SELL, 619-663-7355. We're going to head to a break. When we get back, I want to talk with Cyndy Higgerson with the Whissel Realty team about what's going on in the North County real estate market here in San Diego. You're listening to Whissel Wednesdays on AM 1170, The Answer.
AM 1170, The Answer.